Thank you for joining us for the last session of today, creating a blueprint for change. It's been a day. It's been a day. Who's tired? Yeah, tired? I'm not going to make you do any more animal noises. Don't worry, unless you want to do more animal noises. No, okay. So. Before we get going, I will pass on to our great panelists this afternoon to introduce themselves and what they do. And we have been listening and reflecting and thinking all day, so we are really excited to get into this conversation with you this afternoon. So, without further ado, Patricia, would you like to introduce yourself and who you are and what brings you here today?
Hello, everyone. I'm Patricia Hamzahee. I actually wear a lot of different hats. On your program, it says that I'm a non-executive director of Social Enterprise UK, which is true. But I run a company called Integrity Capital. I left conventional banking, investment banking, to work in using my skill set to help social entrepreneurs find private investment, and that's sort of my professional hat. My non-professional community, totally socially focused hats are, I am co-founder of something called Extend Ventures, and we do extensive research. Some of the numbers that Duncan shared, we do extensive research into access to funding for diverse founders. I'm also co-founder of something called the Black Funding Network, and that is, we're just 4 Black women who are trying to help very small, under-resourced, Black-led community organizations do some crowdfunding. Our next event is coming up in November, and if you're interested, blackfundingnetwork.org. Our deadline for applications, if you have an income of under 100,000, is the 30th of September, so I encourage you to apply if you can. Thank you.
Thank you. And?
My name is Kevin Osborne, and I also wear many hats. I run an organisation called MeWe 360, which is an incubator supporting Black creative organisations, and we basically provide them with business development support in order to help them develop and grow their businesses. And off the back of that, having been running that for 10 years, a lot of those organisations were then looking to grow and to find finance and were struggling to be able to do that. And so 2 years ago, having realised that there was a gap, I set up a company called Create Equity, which is about fundamentally providing Black founders, and I use the term Black in the political sense, to get investment. So we're in the process of doing 3 things: setting up funds. Next year we're going to launch a commercial fund, a £10 million commercial fund in order to support Black entrepreneurs in the arts, creative industries and media and sport, interestingly. And we're just completing the raise on that. So we've raised £5 million. We're looking to raise another £5 million before March next year. We're also setting up an impact fund alongside that. So that has also raised £5 million, and we're looking for an additional £5 million for that. And we're also developing an accelerator, which is going to act basically as a pipeline to those various funds. And I think it's back to the point I think that Kunle was making, which is trying to create an ecosystem that allows Black-led organisations to funnel through over time. And I guess my history has been in that long-term development, and I may kind of touch on that again later, but I'll leave it there for now.
You weren't kidding when you said lots of hats.
Lots, but I think the key to doing that, and I think it's important to say, is partnerships. So in terms of each of the projects, I have major partners alongside. So we've got a VC funder. We're working with Nestor on the social investment fund, and also with SIB on the accelerator, for example, so social investment business. So those partnerships are critical to be able to give you the capacity to do as many things as I'm trying to do, I guess.
Yeah, of course. And so, Kevin, we'll start with you and then ask Patricia as well. But what have been your reflections from today?
I guess, picking up on what I guess Stephen Baderko was saying earlier, I think there were 5 points that he made. I can't remember all of them now, but I think the key one for me was the whole thing of whether it's an evolution or a revolution, if that makes sense, in terms of sharing power. And from my perspective, he was saying it doesn't need to be a kind of revolution. In my mind, it has to be probably both, right? I think it's an interesting one because I think power is not a zero-sum game. I think you can share power and there's enough to go around, right? But power in our current system is directly linked to money, and money acts as a kind of proxy for power. And where I think money is a zero-sum game, especially when you're talking about limited resources and cost of living crisis, and fund has been under more pressure than ever. And so in that sense, I think what's necessary, I think as was alluded to in the last session, is that there needs to be more black-led funds. And for there to be more black-led funds, more money needs to go in that area. And then therefore, where is that money going to come from if there's no extra money? And so to a certain extent, that money has to be directed more to black-led organisations than it is to current white-led organisations. If we're then looking at it from the position of who is it that makes the decisions about what impact is and who gets funding for kind of social impact, again, those positions are predominantly held by white men, many white women as well, and actually those positions need to be changed. And who of the many funders here who are predominantly run by white leaders are willing to give up those positions in order to redress the balance? And that's what needs to happen. And that's what I mean by power being able to be shared, right? So somebody giving up power is a powerful move in itself. They're sharing that power, but actually what's linked to that is the fact that they also have to give up the salary that goes with it, which becomes a bit more problematic.
That's a really interesting point, and we will definitely come back to that theme of power and divesting power, but it actually really speaks to one of my reflections from today, which is this morning I spoke to a social entrepreneur who told me that his wife was one of the few black head teachers in the UK. And then this afternoon I spoke to another social entrepreneur that told me that he was running a business helping more black people get into commercial construction. And then this afternoon I spoke to someone that told me that they were running a social enterprise helping autistic young people who are autistic but also racialized access opportunities. And so it's really interesting because actually some of the things that we are talking about in here, giving it power, we see them playing out all across society. And when we leave this room today, that is what we are speaking to. It's not just about what we're doing, what's happening in this room, is all of the tools. Social investment is a tool, right? And it enables people to make change to tackle those things that are happening across our society. But I think that theme of power and divesting it is so spot on. So Patricia, let me come over to you. What about your reflections for today?
Sure, I'll share my reflections, but I just wanted to follow on from what you were saying. So my watchwords across everything I do is collaboration, co-creation, and community. And what I heard a lot from, especially from the social entrepreneurs here today, is that they want the opportunity to work collaboratively and co-create with the funders, with the investors. And I think that is probably, if I just have one message, that's where a lot of the investment needs to be, in terms of the effort as well as the funding, is just to enable the solutions to be created, collaboratively, so that the solutions are right. I would say my reflections of the day was from the very early slide. I actually did tweet about this. So because I come from a commercial, a conventional investment banking background, so that's how I got into the world of finance. When I see social investment is repayable finance, I just don't understand that, okay? Investment is not repayable. Investment is about making a decision to invest, and you may or may not get a return. And I think that that's a starting point for the social investment sector to really interrogate itself, to understand that, and I love the idea about repayable finance, because yes, some of it will be loans, but it shouldn't all be loans, or mostly loans. And I do think that structure, that perspective, the concept of risk within the social investment sector is really, for me, very problematic. And I do challenge the sector to really take the time when you're gathering, when you're all together and behind the leaders or behind the closed doors. That's where I really would ask that you really deeply discuss what different approaches you can take, because that's the only way that we are really going to make any radical change, systemic change in this sector.
I think that makes complete sense. Because I think it was interesting, because I think it was you that was talking about the due diligence process and the need for it to be thorough and the time that it takes. But actually, the most money that I've raised in a meeting that has lasted maybe an hour or two, and it's back to, I think I've forgotten the lady's name on the screen. They're backing the person, they're backing the team, they're assessing risk, and these are multi-million pound companies who are investing on a different basis, right? So it can be done, and commercial investment, to Patricia's point, does invest on a slightly different basis, if that makes sense. A big part of that is who you're invested in, as well as obviously they will check the business plan. But actually, I've walked into rooms and, raised £2 million off the back of, trying to push my business plan across the table, but actually them not being interested in that, them liking the idea, believing that the team that was pulled together could deliver it. And just because they liked the idea, they kind of went for it. Now, of course, there were checks and balances, but they were far fewer than I'm finding in the impact sector. And I'm just like, well, hang on, these guys are making money out of checking in a slightly different way. So it can be done. And I think that the impact sector just needs to open itself up to those different approaches. Now, that's a wider question in terms of, I think, the way the impact sector is regulated. And I think that's where it then comes down, because I think the Charities Commission and the different regulatory authorities that determine what can be invested in, I think is what can drive some of the impact investors to do what they do, if that makes sense, in the way that they do it.
Yeah, absolutely. I would say that there are kind of checks and balances in place that affect the way that impact investors don't have to, but currently approach. So my next question for both of you, going off script, is: are there any examples that you have seen which you think could translate, or where this is being done well, which you think could translate into the impact investment sector?
In the States. So I'm now spending, a good portion of my time, traveling to and from the US, because, again, trying to raise the money here was kind of, I don't know how to describe it, but almost drove me mad. It literally did. And spending time in the States just helped me to realize that I'm actually sane, because actually there are different ways of doing things. So, I spoke to the Rockefeller Fund, for example, and absolutely, they don't, not only do they distribute grants, but they have 100% of, their billions of pounds invested in mission-related activity. So it's not that they just live off the endowment as happens here, if that makes sense, and live off the interest of the endowment and use that to do good work. Yeah. Everything they have, all of their resource, is deployed in that way. And I'm wondering, if they're able to do it, why we can't do it here. Similarly with organisations like the Ford Foundation, for example. And then the IRS in the States have, kind of made it law that at least 5% of any endowment needs to go to mission-related activity, if that makes sense. So it's then law, right? So again, I think there's something government can do here in terms of how it regulates. So there's a regulatory authority that has to kind of change the rules of the game. I think those rules are often interpreted by the trustees of major funders in a very conservative way. They're there to preserve their reputations and the reputation of the organisation, rather than to deliver impact. They have to take more risks with their jobs, with their organisations, even though they're there, to make sure that they are driving impact as hard as they possibly can. And I think that is part of the definition, to me, of a good impacting organisation, not just to measure impact, but to also drive what impact is, if that makes sense, and so that you're delivering a greater kind of social benefit. And then the final thing that I think is a problem here and in the States is the fact that funding organisations that deliver more money to black communities is not in itself seen as a social good. So that doesn't even qualify as a social impact, if that makes sense, and that in it is a problem.
Yeah, well, it was something that Kunle touched upon earlier this afternoon with his voice with his work with Voice for Change. But there are actually not that many organisations dedicated that get the funding and the support that they need to build the capacity and the infrastructure to enable Black-led organisations or racialised-led organisations to thrive. And so that in of itself is kind of a bit of a failing in the wider systemic issue, is that even the people supporting the organisations are struggling with funding and capacity. What about your thoughts, Patricia? Do you have any ideas or examples of things that are being done to challenge the status quo and disrupt the social investment space as it currently is?
So I think there are some initiatives that we're already seeing. I think I am very a fan of Unlimited Growth Fund. I think people are trying, and some funders are really trying. They are really thinking hard and really scrutinizing how they do things and are willing to take more risks in what they do. But I will echo with what Kevin says, because as you can tell from my accent, I come from the other side of the pond, even though I've been here over 30 years. And I will say that what's missing here, in a way, is the real acceptance of what harm is done if the right investment doesn't go. And obviously there's huge social harms, or you wouldn't be doing the amazing work that you do. But economically, this country is really held back. So in America, Citibank, they found that $16 trillion over 20 years was lost to the U.S. economy because of racial inequity, okay? $16 trillion. A study last year on the Black community wealth found that the UK economy, not trillions, but still, loses 25 billion pounds on GDP because of racial inequity. That's an economic question. So the investors, social investors, government, other actors need to understand that by addressing the balance of that, to try to address the imbalance of that, it's good for everyone. And there should be a really a common sense approach. In America, there's a lot of ring-fenced funds. And I'm sorry, I don't see what's wrong with ring-fenced funds, being very intentional. You can have your requirements, your standards, your due diligence, all of those things, fine. But just to say, we are definitely targeting the inequities that we see across the different dimensions. And I think that's important.
I think that's absolutely right. And so, people don't like the word quotas. I always use the word equity. We have to fund equitably, i.e. in proportion to the size of the Black population, in proportion to the size of the disability population, if that makes sense. And that isn't even a risk or not risk thing. You invest that money come what may. So if you've got a fund, £100 million fund, and you can't deploy, 14.5 million of that equitably into organisations that you don't think are ready to receive it, then what you fund those organisations that are ready, and you use whatever is remaining to fund the development of more organisations. Because either you believe that the inequity exists because of the inherent issues that Black communities have in running businesses, or you believe that there's a historical imbalance that needs to be redressed. And the historical imbalance is a social impact, if that makes sense. It is saying that there's a historical underfunding, historical prejudice that has existed in the system that needs to be redressed. If that's not social impact, I don't know what is.
Yeah, and I think it was actually one of the SE UK reports where the title was No Social Justice Without Racial Justice. If you're at home, please do send us in your questions, but I'm going to read one comment which has made me smile, which is, Patricia and Kevin for president. Let's come on to the topic of power, because, I'll
be vice president.
Let's come on to the topic of power, because I've really been struck by it today. How many times so many of the things that we have talked about come back to that underlying topic of power. So Kevin, I'll come to you first. 1, what are your thoughts and reflections on that particular theme from today? And 2, do you have any examples where you're seeing power being challenged or disrupted or divested in a really meaningful way?
So in the UK, I think there's a lot of talk about divesting power, and I think that has happened since, the Black Lives Matter movement. Though, again, I think it will come down to, are people willing to sacrifice financial gain, if that makes sense, in order to kind of distribute what position and what power they have. I guess the other thing for me is this measurement question. Because I think what again counts as impact is really, I think, a key decision, so a key issue. So I'm not sure whether or not we'll ever break through the barriers that we need to break through without really addressing fully, what it is that counts as social impact, if that makes sense. I know I'm kind of repeating myself, but I think those two points are pivotal.
Yeah, of course. But Patricia, what about you? What are your thoughts on this?
I think that the issue of power and the ability of the social investment sector, the leaders, the influencers, the decision makers in the social investment sectors, the willingness that they have to cede power, not to give it away, but to, in a way, to share. So take some of my power and I will share it with others in the sector. I think that's going to be important. Again, I go back to collaboration and co-creation. It is telling to me when I go to spaces like this, I don't know how many senior level people of the funding bodies are in this room. I know that many representatives of organizations are in this room, but I think there are not many senior top level people in this room. That I'm just saying. But I go to spaces where we gather, where we are talking about this, where we're trying to demand change. I don't know how many of you go to Martha Awojobi's wonderful BAME online, just to vent sometimes, but I can tell you, I do speak to very, very senior people, leaders in the sector, and I mentioned, that, I mentioned, have you been to the last one and heard? Because I get asked, oh, what should we do and how can we do it better? And I said, well, go to those spaces and understand and listen to what's being said. And most of, I would say all of them, don't. They don't visit those spaces, so they don't hear, and therefore you don't learn. And I think that's the kind of demand and challenge I would ask, that it's important to be in the spaces. If you really want to make the change, you need to be in those spaces and really engage and interact with the people that you are hoping to support.
I could not agree with you more. And for those of you who don't know, Martha runs an organisation called JMB Consulting. Every year they organise an event called BAME Online, where they talk about all things in the sector, but especially fundraising. So it's definitely one to put on your radar for some of you today who I know are thinking about it. So before we came on the stage, I asked both my panellists what they really wanted to get out of this afternoon's conversation. And actually something you said, Kevin, was space with all of you to have the conversation, to have the dialogue. So we are going to open it up to questions. Where do we have some questions? Awesome. We've got one over here. Should we take that first? Mel's just coming over with the mic.
Okay. I just want to thank the Good Finance for the brilliant food, the ambience, the people, to give honor to whom it's due. And I think there's a word that keeps cropping that I discussed with Mel: accountability. I think the social investors are looking for accountable organization to minimize their risk. And I want to put it out to the Good Finance and Mel's company today to create addressing the Imbalance Club, which would be a quarterly Zoom meetings to bring participants from today in a meeting of where they are from what they've gathered today. Because I've been up since 5 a.m. I've had to shut down the shop to be here today. And in Oxford, one of the things I was trained at the university is that 1 minute counts. So we have 3 meetings a year so that we, as social entrepreneurs, want to know what you're doing about our fears, our issues, our weaknesses, and how you can help us. And you need to know where we're at in our journey of social enterprise.
Yeah, we hear you. We hear
Accountability
you.
Club. Thank you.
Yeah, we hear you. We will absolutely take that feedback on board.
Yeah, I mean, I think it's interesting, and also in terms of accountability, you know, I've been researching now for a couple of years, and I still haven't been able to find out what percentage of social impact funding goes to black-led organisations. And it's not because I haven't asked, it's because the minute I ask, they run for the hills. All apart from social investment business, I have to say, who seem to have a whole kind of
Data
template.
dashboard.
You know, I mean, it was like, wow. I mean, they literally drowned me with information when I asked for it. Everybody else absolutely saw it as a reputational risk, right? And for me, race inequity and inequity generally, the waste of human potential is an existential threat. It's the same level of existential threat as far as I'm concerned, as climate change is. We can't waste the human potential in our society without that eventually having deep ramifications in terms of how it plays out in our communities. And I think that hasn't quite yet been realised, or it certainly isn't being treated in that way by most of the funders. Whereas I think a lot of impact investing, and in fact the majority of it, is going into sustainability. Wind farms, solar farms, you know, it's going all in that direction. And that's all types of social investment, be it commercial social investment in terms of pension funds or kind of more charitable, let's say, social investment. It all goes in that direction, or most of it goes in that direction. And banks as well. I mean, they have an ESG function where they should be distributing their money towards, you know, environmental, but also some social and governance stuff. But they don't do the social bit very well. And I think the social bit is just the tricky bit that people tend to ignore and manage rather than kind of invest into as an existential issue.
Well, it's interesting because I think it touches upon something that Duncan said in the earlier panels about intersectionality, because you also can't have climate justice without racial justice. Like the current flooding in Pakistan is a really good example of that, and you cannot separate those things.
You can't, but I think I hear the phrase a lot, but people do.
Yeah.
That's the reality.
Yeah, they do. And actually going back to Kevin, and he talked about this thing, the report that they did with the Bering Foundation, which was actually back in 2013, I've actually read it cover to cover, and one of the things that they talk about in that report is the creation in this sector of what is called a single identity. Because when you apply for funding, you tick a box to say, I do X, I'm from this background and I serve this community, and actually it's created an entire sector and an entire narrative where we talk about things in single identities, and that is holding back that human potential because we're not recognising that intersectionality. But I digress, and I know that there's more questions in the audience. I think we've got 2 back there, yeah?
Hi, yeah, I just wanted to ask Patricia and is it Kevin?
Kevin, yeah.
The guy earlier on mentioned the fact that with a lot of black organizations in particular, we have not an understanding of how finance actually works, and that most companies will have to get finance in order to grow. We have a problem at the ground level. Is it worth the training? And what we've actually got to do is train people about what finance actually is properly, and have this at a lower level, not just at social level, but it has to go right down to when they're forming their thinking. And how do we do that? Because otherwise they won't apply neither. And I know that Unlimited did a study about 4 or 5 years ago that as soon as they went from £5,000 to £12,500, all of a sudden all the black entrepreneurs dropped off. They wouldn't apply for that because they generally don't feel they're worthy or don't understand what debt is and how it's used from a business. So how do we tackle that? Because for me, that's the most important factor.
Yeah. And there you're talking about mindset, right? And changing mindset isn't a quick project. Because these things are historically ingrained. If you come from poor, and I think he touched on it, right? If you come from poor communities, the whole idea of taking on debt and not living off of what you kind of generate has been taught to us. And so that whole thing of taking that risk and risking what little you have in order to kind of grow something can be counterintuitive, and that I think just needs some time, right? So I think it would change, but I think that's part of the capacity building that you need to do as part of, so part of what we will do as part of our accelerator program is to kind of take people on that journey. And I think he articulated it so perfectly about what is my purpose, what is it that I'm trying to do, and how does taking on this loan effectively help me in achieving what I want to achieve. And then there's an emotional dimension to it. I mean, there's nothing more emotional than money. If there's ever an argument between, a husband and wife, it's gonna, money is gonna be in there somewhere, right? So it's deeply emotional, and we can't take away from that emotional and historical dimension to the problem that we're trying to solve, and therefore that work needs to be done and it needs to be paid for.
No, go for it, because I have an opinion on this, but you go first.
I'm just going to say, it is, so social enterprise are businesses, right? I mean, social purpose and all that, but it's business. So basic business principles should apply, right? And I think, again, the cultural aspect of debt, particularly from disadvantaged communities, is very important. Because if you do not have a credit profile, you're not going to get a loan from a bank. You're just not. So, and those are just basic fundamentals that we need to communicate and help, to ensure that people understand that. But I think on the other side of that, I also feel it's not right to say we need all this remedial education even to get to a level to be able to claim, investment opportunities. There are many, I know many, and I'll talk about you, and I know many social entrepreneurs who are very savvy and they still don't get the funding, right? So I think it's a double-edged sword. Yes, if we can offer part of the support that should be given is a bit of education and an understanding of the marketplace, but it is again, we are very over-mentored. We get a lot of support and no money. And that does not take people very far. That was said earlier in the day. And I just think we have to really understand the impact of that kind of decision making.
Yeah, well, this is where me and my president can maybe have a little argument. I'm only joking. I think you're right. And obviously what we're saying is that actually grant funders see that need and that development as something that's easy to fund, right? But what I'm saying is actually if you redeploy, in the arts, for example, only 2.4% of arts and creative industries funding goes to black organisations. If you redeploy the rest, what it should be, there's going to be more than enough money to fund all of the pipeline that exists that are ready to receive that money and do the remit. You know what I mean? I think the gap is so huge, and we're talking about. And then you take VC finance, where less than less than 2% of black founders get access to VC funding. If you take the
0.24% of the 10 years of VC, that's our research, Accent Ventures.
Correct.
10 years of VC funding.
Yeah.
0.24% went to black founders, and 0.02% went to black women.
We said this morning we were up for a debate, and here you go, ladies and gentlemen, we have got one.
We had to wake you up somehow.
I am going to both agree and disagree with you both, because I think that there is absolutely a need for that confidence building, that skill building, etc. However, I think that needs to go both ways, because what I would love to know is how many people on investment committees, how many people making those decisions really truly understand the business models, the markets, the communities that are coming to them for funding. And so as much as that capacity and skill building needs to happen on your level, the people that are running the organizations, we got to be doing it as well. We have to understand the communities, the markets, the business models that we're seeing. And back over to you guys. I know there's a few more questions. We're running out of time.
I want to applaud Kevin and Patricia for the amazing work you're doing to support the community and to help them sort of come up. I think it's amazing and I'm inspired. But what I want to ask you guys is, a question to both of you is what is the one thing you believe that investors can do to turn those statistics around so that in 5 years' time it's not 0.24%,
Brilliant question.
it's 24% or 204%. What is that?
Yeah.
Hold that for just 1 second, to take you the question.
Yeah, of course.
We'll run out of time.
Hello, hi Kevin. Going back to the discussion around power, firstly, I do like your answer that you gave in terms of when a financial incentive is in place, it does create a sense of fear within leaving or handing over that sense of power. My question is, from your experience, how have you gone around navigating that to remove that fear or the stigma that comes with handing over of power or getting or in a discussion around that?
So we'll take your question first, and then we will end today's conversation with the question that you asked, which is the one thing that investors can do to turn those stats around.
Commit to a target. So, yeah, I would say all impact investors, especially impact investors, should commit to funding equitably within the next 10 years, full stop. And they should be transparent about how they account for that on an annual basis. And I think that the learning that would come from that, because it may not go as quickly as people want, but I think the fact that they are accountable each year and that they would report against that would, I think, mean that that commitment would mean that more learning is gained and that they're more likely to achieve what they need to achieve, which is equitable funding. Otherwise, I think what's happened is that it's been completely invisible. So everybody talks a good fight about equality, but they never set a target against it. And I think if there was one thing, I would say commit to a target.
Right, and it comes back to that thing on accountability, which is not just accountability that we look for in who we invest in, but accountability of giving ourselves a target and measuring it and being transparent about it and reporting on it. So, Patricia, your thoughts on what one thing could investors be doing to turn it around?
I think it would echo what Kevin's just said in terms of the target, but I would also say that target should be supporting, again, a ring-fenced fund for investment that is equitable against the targets that we're talking about. And I think, if 25 billion pounds of economic boost, or even the 60 billion pounds that social enterprises gives back to this community, gives to the economy of this country. If we just took 4% Black or 14%, ethnic minoritized, and just took those percentages and say of that 60 billion, this is the size fund. We're not talking 1 million. We're talking about a lot more money. And just again, I would be happy if we said 500 million. If we started with a 500 million fund, which we don't have. And that's I'm sorry, my Americanisms, but that's just chump change in the reality of the world. And yet we can't get there. And I think that's, the challenge that we have, to make sure that we can think bigger and think more equitably.
Oh, my goodness. I mean, that is spot on. I started off trying to raise a £25 million in the UK. People looked at me as if I was mad. I mean, really, it was ridiculous. I mean, we've now, it's now a £20 million fund split between two funds and all that kind of business. We've had to adjust, right? But I went to the States and, just in New York, Harlem Ventures, £200 million. I mean, the scale of things and it's the attitude that they know it has to be big to be effective, and everybody knows, 99.9% of VCs fail, right? So it is a numbers game, and you have to invest in, you have to have a minimum amount of investment to make a fund work. Otherwise, it's just unviable.
Guys, I genuinely wish I could pick your brains
One
on
more
what
point, just on that. One more point. Just on what Kevin just said. Just on what Kevin said about the scale and failure, okay? So I don't know how many of you know a man named Adam Newman, who's the failed founder and CEO of WeWork, okay? He just got 350 million VC investment. And he's failed several times, not just once, okay? But that's because he's part of that club. And if risk can be applied like that, Why can't risk be applied in a much better way? I'm sure most of you would be returning much more than he would ever be able to do if you had the chance. So.
For those of you that don't know Adam Newman, my God, look it up, because it is mind-blowing. And on that note, not the last thing I thought I'd end this panel on, but can we please have a massive round of applause for President Patricia and Vice President Kevin. Thank you so much. We'll hand back over to Mel to wrap us up for today.